how about the triggers? But in order for the commodity market, in order to resume its upward rising trend again, we need some kind of triggers to push up the prices, right? What kind of trigger can we expect from at that point of time?
That's another great question.
Yeah.
You've got some really excellent questions. The trigger this time around is going to be very different, in my opinion. It'll be demand, of course, it will be demand, but the question is, where does that demand come from? Does it come from rapidly growing US and European economies, or does it come from demand due to another source? My opinion is that the US and European economies are going to remain weak. The demand, the normal demand, therefore, for commodities won't be very good from US and Europe, but there's a different type of demand. And that type of demand is when investors in US and European markets start to really exit the sovereign bond markets, which they're starting to do now, because they realize Europe is broke, United States is broke, they're going to have to move their money into other assets and other sectors. They're going to go into equities and they're going to go into commodities because there aren't many other games in town. So you'll see capital flows partly because of demand in Asia, but partly also because the economies of the West, ironically, are not so good, but the bond markets are terrible. That money has to go somewhere. So some of that money will go into commodities as well.
For sure, we have to keep an eye on those factors, right?
Yes.
Okay, so if that is so, you said that like the commodity market overall is bottoming out very soon, right?
Yes.
If we are to break it down into various asset classes, because we can see gold, like copper, steel, as well as oil as well.
Right.
So which one of those would you recognize as having the highest growth potential from this point of time to like the early of 2014?
That's a tough one.
Yeah.
Well, gold is my favorite, being a long time 35-year trader of gold. I would say gold probably going to bottom in US dollar terms somewhere between 1,000 and 1,200. Go a little bit lower than the last low at 1178. Over the next 3 to 5 years, gold is going to go to higher than 5,000 US. So gold's got great potential. Silver also has excellent potential. The grain markets, the food markets, have fantastic potential going forward. They've been very weak for the last year and a half. They've gotten back to 2008 and lower prices. They have enormous potential going forward. Copper has enormous potential going forward. Copper is actually holding up the best of the commodities, largely on Chinese demand, but copper has excellent potential going forward as well. I like the precious metals because they have that monetary aspect. They're partly a hedge against inflation and against government problems, which we're seeing in the West.
Okay, so let's touch upon gold a bit, because we can see that gold doesn't, like nowadays, gold no longer like acts as a safe haven asset, right? Because last time during the government shutdown, gold was supposed to react bullishly. However, it didn't respond much because we can see that gold is still pressured to some extent by other factors.
Right.
So what factors would you like to name out, like the dominant ones?
Well, the government shutdown in the US was not bullish for gold because big money can't all go into the gold market. The gold market is too small. So the big money went to cash, and it went to liquidity, out of bonds, into stocks, into cash. It did not go into gold. That doesn't mean that the next time this happens, gold is going to miss out also. The next time this happens, it's going to be a lot worse. I'm an American citizen, but the American economy and the American government is an absolute mess, okay? Washington is broke. It's just a matter of time before it defaults on its obligations. And when it does default, gold's going to go through the roof.
So like given we have 3 months left, right, for this, for the end of this year. So what kind of will have you developed it for some kind of gold investment in gold, and what strategies would you like to recommend to our viewers?
Well, the best way to invest in the gold market, there's a couple of ways. Everybody, in my opinion, should own some physical gold. And that can be gold coins, not rare coins, because that's a very particular market. That's like investing in the art market. Thai baht gold is excellent. Okay. Any kind of pure gold bars or ingots is excellent, whether they're from Credit Suisse or any of the major refiners. You put it in your safety deposit box at the bank or in your home, and you just hold on to it. I would also invest in exchange-traded funds for gold. That gives you good exposure to gold without having to worry about physical delivery and transportation, etc. And then, of course, there's the futures market, where I'm a very big trader of the futures. The futures are risky. They're not without risk because you have such high leverage. But if managed properly, and by that I mean managing your risk properly, the futures can be an enormous way to make substantial gains in the gold market. So I like all three of those. I like the ETFs, I like physical for insurance, and I like the futures market.